By Mr. Sudhir Singh, CEO and Executive Director with Coforge, to understand what transpired for the company for the quarter gone by. Mr. Singh, good morning. Thank you for joining us. You've delivered a margin expansion. You are giving confidence in terms of your forward guidance. Walk us through the environment, because this is in a sense what could be called as an absolute boom time for IT industry.
So the environment is very strong, and as you rightly noted, our results have been very strong. In this quarter, not only have we grown 7.5% sequentially in constant currency terms, we've also been able to expand our EBITDA, not marginally, but by 260 pips. We've landed at 18.7% at the end of quarter two, in an environment that we all know is supply constrained and cost escalations are happening. So overall, we're very pleased with the revenue growth and with a very strong associated EBITDA margin growth that has happened. We've also signed this quarter itself, the quarter that closed, two $50 million plus large deals. So the order book momentum again continues to be extremely strong. Tying back to your immediate question, the size, the velocity of large deal generation just attests A, to the fact that the demand environment is buoyant and strong, B, to the fact that all the capabilities that we've been really building up over the last 4.5 years, product engineering, integration, automation, cloud data, are really at the cusp of driving growth for the organization. This year, as you noted, we believe we will grow at least 35% in constant currency terms. And because EBITDA margin is expanding at the same time, we believe our operating profit for the year will be, again, at least 40% higher than last year.
So can I say that you're on course to become $1 billion by FY23, because if this run rate continues, that should be an easy achievable target?
We believe we should not only become $1 billion, but we should also exceed that metric. And that's and a lot of that confidence, actually all that confidence, is coming from the fact that we believe this year, in the 40-year history of this organization, will be a landmark year where we will, within 1 year itself, grow at least 35%. So you're right. We were planning to be a $1 billion organization. At this point in time, we feel extremely confident that not only will we touch $1 billion mark, but we shall exceed it handsomely as well, hopefully.
How come you are not experiencing challenge on the margin front? The entire industry is going through an extraordinary wage hike stroke attrition cycle, which in a sense will put pressure on any company of your size to either give more hikes or to relook at costs.
See, that's correct. The environment is challenging, and yet we have clearly found a path to expanding our margins. We've proven that from the last quarter, where our margins have gone up not incrementally, but by 260 bips just over the previous quarter. We're doing this through two levers, which are, we believe, a function of the very strong execution that we've delivered. One, if you look at the size and the velocity of large deals that we've announced over the last 3 to 4 quarters, all of that has played into our offshore revenues going up very strongly. Just over the last 4 quarters, our offshore revenues have gone up 8%, and that's a massive margin tailwind for our organization. The second thing which we've done, again, attests to the execution capabilities of Team Coforge, is the fact that this year alone, we are hiring 6 times the number of fresh college graduates that we hired only as far back as just 2 years back. So while you're absolutely right, it is an escalating cost environment, it is a supply constrained environment, and there is pressure on IT services firms. We at Coforge have found our own path towards not just very aggressive growth, but also expanding EBITDA at the same time. And Q2 results are the best possible testament to what we're doing.
Good morning, Mr. Singh. You're talking about hiring 6 times more freshers. You're talking about delivering an operating profit which might be 40% more than last year, upping your own internal guidance of being $1 billion company. So when you do all of this, can I ask you where the growth is going to come from, which particular verticals? And for this, will you have to go for any fundraise?
So at this point in time, growth is fully and truly broad-based. It's coming across industries. It's coming from insurance, and that's been one of the fastest growing verticals. It's coming from BFS, which just this quarter itself has sequentially grown almost 14% over the previous quarter. It's coming from travel, which has grown almost 6% this quarter over the last quarter. And it's also coming from the three new verticals that we started 18 months back, which are now scaled up to being almost a quarter of our global revenues. As far as fundraising is concerned, the second part of your question, we keep regularly assessing fundraising options. The board takes cognizance of it and keeps evaluating it. And as and when a conversation or a decision is made, a conversation concludes and a decision is made, we will get back to you.
Mr. Singh, you just mentioned that the travel vertical has grown about 6% in the quarter under review. We've all been reading about how offices are reopening, business travel is showing some signs of coming back. So as far as this particular vertical goes, any outlook that you can give us, any guidance that you can give us, and of course the ramp up of the high margin product deal with Advantage Go?
Absolutely. So travel for us has now been on a bounce back and a very sharp V-shaped recovery over the last 4 quarters. The close to 6% sequential growth this quarter comes on the back of the almost 15.5 to 16% sequential growth in the last quarter. Our travel vertical, we're very happy about it, is now almost back, if not slightly higher than where it was on the revenue front pre-pandemic. So the recovery in some ways, given the exceptional and the very sharp V-shaped recovery in our travel business is now complete. We expect in the future also, especially when it comes to the European markets, travel recovery, travel growth to continue very sharply. So travel, we believe, on a go-forward basis, will continue to be a strong growth lever and a margin expansion lever for the organization. As far as Advantage Go is concerned, it continues to be a flagship product platform of the organization. It continues to very strongly differentiate the organization, and it also continues very strongly to create a downstream revenue on the insurance services side, which has allowed our composite insurance vertical to do as well as it has over the past few quarters in the past 3 to 4 years.
All right, Mr. Singh, appreciate your time. Thank you for joining us.